Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be looking at Tesla's chart. We're going to be looking at where price came from, where price ended today, and where price is likely headed tomorrow and into the rest of the week. Before I get into it, don't forget to check out the description below. There's a link to the Discord where I'm hanging out during market trading hours. There's also a link to the merch shop if you want to check out any of the Rawstocks merchandise, as well as some other links to my socials and some other things, other ways you guys can support the channel. So let's go ahead and dive right into the chart. We got our Tesla daily chart up. All right, and so you can see we're coming off of that big sell-off that happened over the earnings call, where we just continued to come down, and we took the liquidity that was down here below. If you zoom back out, we're starting to hit some of these fair value gaps, some of these volume imbalances, some other things that we have going on. We've talked about how weak this structure is. When you see a move straight up, there's no selling pressure anywhere. We know that this whole range here, very weak, right? So we came back down, we took the low, we're testing some of this range here, and see if we can find the buying pressure and the support that we need right where we're at, or potentially head down even lower. We have this fair value gap on our daily chart. This is something we're really interested in, as well as this kind of change of character that happened from this short-term high across here. We already have taken this one. If you drew a line from here straight across, we've already taken that change of character and balanced that price range, but we do still have this internal structure, short-term high, or maybe even intermediate term high, you'd call it. But we have that, which also happens to coincide and correlate with the consequent encroachment of this fair value gap, or the 50% or the halfway point, however you want to look at it. So we do still have a downside target, at least one, that we haven't balanced the price range, and we haven't dropped into this this fair value gap. We know that inside fair value gaps there's liquidity, and so if we do sell down, we do expect that we'll see some kind of reaction inside of this. It's a pretty wide range, so we're looking at like 198. We'll just call it maybe even 200 down to 180. 87, give or take. So that's a pretty big range right there. So we might only come down partway into it and find a rally. Might come down deeper into it, find a rally. It's going to depend on the time frame and how we get there, right? If we were to see a massive dump again, we could just come partway into it and then bounce out and then come back and test it later to draw on some more liquidity inside the fair value gap. Or if we rallied up, we might just come straight down into it and call it good and then rally from there. So we'll just have to see as we approach that fair value gap. We'll be watching that very closely. Some other things I want to note on the chart. We got our previous day high, which was actually from Friday. We're going to move that down a little bit to represent the new previous day high, which would have been the high from today. We made a run at it. We did not test. We did not even get all the way up to the previous day high. It is a little bit weak, but as we drop into the shorter time frame charts, you might be able to see what was going on. It doesn't mean we can't make a run for that this wick high here from Friday tomorrow. So we'll be watching. It is Monday. Monday is typically a consolidation or accumulation day. Tuesday we're looking for manipulation to occur. We'll see if it's to the upside or the downside. In previous weeks, we have gotten both up and downside manipulation, so it was hard to read which one was the actual manipulation. But we're going to be looking for that, right? Because we do have accumulation here or consolidation. So we're looking for manipulation, maybe a drop down and then rip up, or trading up higher and then just rip down. No matter which way, if we see the manipulation, we're going to be looking for distribution to occur to the opposite direction of the manipulation. So we're going to be watching that tomorrow. Let's go ahead and mark off our previous day low, which was today's low right here. Okay, we got our previous day low. So we're looking for that low to hold. And then again, we got our previous day high here. And you can see there's some green levels in there. I'll show you what they are when we drop down to it, but those are more for the intraday chart. So if we were to clear this previous day high of today and take out this wick, right, where are we heading? We're heading to test this candle here. And then we're looking at the imbalance here between these. Or there's a giant fair value gap here. We're looking for something like that. There's a lot of targets to the upside. I'm not going to mark every single one of them, but I will mark this wick here. That's going to be important in my opinion. If we start getting up there. And then I'll mark this wick right here too. Okay, so I'm really looking for us to trade into this range, the 230 to 240 range. If we do start breaking out above this candle and into this candle, we'll be looking for it to trade up there. I do think Tesla, because of the volatility, is strong enough that it could push up there and then still see a nice sell-off. But we'll also just see if we get more continuation to the downside. You can see the RSI reading is pretty beat up. We're at a low, but that doesn't mean we can't bounce, test the control line, come back down, set a new low on the RSI, or even a new low on price and a higher high on the RSI and catch some divergence there and maybe look for another rally. So we'll just have to be watching those different things as we move on in the week. Let's go ahead and drop to the 4-hour chart. Okay, 4-hour chart shows the same thing. AM session had a nice rally, traded up, did not top the peak here, which is where there would be some additional liquidity inside that wick. Okay, and then the PM session, the second half of the day, we just saw some kind of minor consolidation, a little bit of a sell down, but nothing too crazy. These little green lines here, and when we drop to the smaller time frame, you'll see there's a fair value gap. That's why the magnet's there. The magnet is to represent that price is going to draw down into that fair value gap. Let's see if we can move it. There we go. So price is going to, probably want to draw down into this fair value gap, even if we see a rally. So we'll be watching that closely. That's something that developed today. We started to see some, bullish indication. And so we'll see if we can continue to hold some of that bullish momentum. Dropping down into the 1-hour chart, blow it up a little bit. Here's where you start to see, a little bit more clear picture of what happened today. Right, let's adjust these so they're more accurate. There we go. All right, so, and there's our previous day high. So what we had is a really early sell-off on 1 hour, right? Our first 1 hour candle, we dumped down. We rallied back up quickly. We had a nice breakout candle, right? But it did not quite test the equal highs here. The very next hour, we tested the equal highs. Okay, we had kind of just a doji candle. Then we tested and broke the equal highs, and we pulled up, but we could not test any of these additional candles. We rejected there, nice rejection wick, and then sold down ultimately through the rest of the session. But not any major selling. I mean, that high was 217. Down to, 211, 212. So nothing too crazy compared to this rally we saw here. We did have some nice call outs in the trading rooms on Discord. Had a 50% call, had a 70% call out. I know some traders held on a little bit longer. I got the early exit. Some traders held on a little longer, got over 100% call out on those Tesla calls. So good job if you caught that. Nice profit being made. We were 2 for 2 on those call outs today. So continuing our winning streak with the live calls in the Discord trading rooms. So still can't see where these fair value gaps came from. We are looking as we drop down into the shorter time frame to show you exactly where those came from. But we did take the high here. And so what I want to note is that this high here, intermediate term high, right, compared to this, right? This is an intermediate term high. We've got a long-term high wick over here. But we did take this, and technically that, even though we didn't close candles above, there was a, kind of a fake out on a break of character there, or a change of character, I'm sorry. And so we did, even though we rejected, we're going to look and see if we can break those levels tomorrow. So maybe we trade down into this fair value gap and then we rally up. Maybe we just take it right away. We'll be watching to see which one of those happen first. But I am looking for this level to potentially break. And if that breaks, there's not a lot of structure in here, right? Even though we had some kind of chopping, it more or less just sold down. There's nothing really convincing here that says we're going to stop at any of these levels. I do think once this breaks, we're going to see a nice rally up to that trading range that we were talking about in the 230 to 242 range between these wicks here. So once that kicks off, if we do get that buying pressure coming in, I do expect that we'll get up here, and then we might see a bigger sell-off that brings us back into this fair value gap. Again, this structure looks really weak. It just was kind of a sell down with not a whole lot of structure in it. So if we drop down to the 15-minute chart, we can see a little bit more clear here on the 15-minute chart. Even though we got that on the 1 hour chart, it was a rejection. On the 15-minute chart, it does show that there was a change of character here. Okay, we got a intermediate term high, we got a short term high, intermediate term high, we got another high over here. We broke that. Okay, we broke it by a candle. We traded back down. That's a lot of times what you expect. I mean, we would love to see this candle be a bigger breakout candle and then come back down and test that change of character. But what we did see was it broke. We've traded down. Maybe we'll get down to this fair value gap. So you can see now on the 15-minute chart, this is where that fair value gap that I had marked off comes into play. So we want to be watching that because price will be drawn back into that fair value gap, or it's going to be magnetic and want to draw price towards it. Because we had this just nice rally here, I was kind of expecting, I thought we might get it today, but I was kind of expecting rally up, draw down into the fair value gap, and start to see some buying pressure again in that fair value gap, in that liquidity, to confirm that we are, potentially going to see a bigger rally. What I do want to note is that we closed the gap and we traded back down to where the gap was. And so I do think that's also important to note that we're holding the gap. We've already closed it, but we're holding the gap level. So maybe we don't trade down to the fair value gap. Maybe we keep it. We just tested this gap. We're going to run up from it. So we'll have to see. Also put a level here because that was like a micro change of character before we actually took the real structure. I wouldn't really call this much of a high because we kind of came down and set a little minor high, a short-term high, traded down, right, and we rallied back up. So technically, internal change of character here, a little bit more of an external change of character here. Broke it, traded back down. So again, looking for either further to the downside here, then continuation to the upside, or maybe we just hold this level, get a move up, and then get a sell down. So if we look at, again, shorter time frame charts, we can see similar stuff inside this 15-minute fair value gap. There's a smaller fair value gap right here. That's important. There's also another small fair value gap right here, which we have currently traded down into. So I'll go ahead and mark that off just so you guys can see a little bit more on the visual side. Right, there's our fair value gap. It's a bullish fair value gap. We've now traded down to it. Maybe there's enough liquidity there that'll give us a boost. But if it does sell down and close through, we're looking at this fair value gap from the 15-minute chart. So I'll go ahead and take that off, but make sure you have those fair value gaps, annotated on your chart. I don't need it right here. I can see it. Plus, it's inside of this gap, which we're also holding. So I'll just be watching those things as price develops tomorrow. And then if you drop into the 1-minute chart, we had a really nice entry on our call-outs today. And where I got that was we've been just selling, right? We had this awesome just face ripper to open the day, just dumped. We had an RSI reading that went way oversold. I saw this first fair value gap, right? Fair value gap here, fair value gap here. So that becomes an inverted fair value gap. And not likely that price is going to trade back down to this fair value gap anytime soon. So we're watching this 15-minute one because that developed later. But our entry was down here. We could have swung calls and potentially got a much bigger payout if we rode them further into the week. Because that was an awesome entry. I mean, that first inverted fair value gap there, and price just soared from that point. Never really looked back. We hit that high, and then you see, lower high, higher high, lower high. So some indication that, we are going to be reversing. If you were to, have caught either, this point or this point, you would have caught a nice little sell off. Not a huge one, but 215 down to 211. So you would have caught, a little bit of a sell off if you rode puts on that kind of, it's not really it's not really a head and shoulders look, but it is a lower high, higher high, lower high. So that's a good indication that you could look to go short. You also had a bearish change of character here, and then you had a low taken here, right? So draws on liquidity on the 1-minute time frame, rallied back up. I don't think we even got an optimal trade entry on that one. Let's just go ahead and look. We got back to 61.8 fib level, so would have been a decent look, but it happened so slowly. I mean, there was nothing rapid about this, so I wouldn't be incredibly convicted in taking that trade, just because, again, we just chopped, right, burning time off the clock, got a little bit of a dump, but barely down to that, that first take profit. If you were trading the the fib level multi contract entry and exits, you would have been scaling off some back at the zero. So you would have caught this little move here if you were only trading a single contract. If you were trading multiples, you would have caught first exit, second exit, and then we never hit the additional fib levels. We ran out of time. So again, not extremely convicted. I did jump in a short. I didn't call it out. Took a very, very small loss, about $20. No big deal. When I think I caught it in here, and when price started rallying up, I just cut it loose because you just never know with Tesla. I could have just ran up and burn that put. So got out, managing some risk. Not trying to be too crazy with it, but again, 15-minute chart, fair value gap. Really watching this closely. Seeing if we see something like this early tomorrow, right? That's what I'm really watching for. And I'm watching for a bigger move this week to potentially take us up into this range. Okay, that early manipulation could be coming back down to take this sell side, could be coming to take this fair value gap, rally up from there, right? But if we see early manipulation to the upside and we take some of the liquidity targets up here, run on this liquidity early, that might be the manipulation that we see this move happen down here, right? Because it would be pretty smart of the market makers and the big money to, have things look bullish, do a little fake out. We think we're going higher, take a run on the stops down here, grab some more liquidity, right? Potentially into the fair value gap, free up some liquidity, right? And then rip it from there. So we'll be watching those things closely. We'll be watching very closely whether price starts moving up to the upside first or to the downside first, because that's going to probably be a good indicator of what the next move is. So hopefully this has been helpful. Let's just go back out to a higher time frame, and the last thing I want to look at is where the moving averages are. Just so you guys can see that. Most of what I do is smart money trading, smart money concepts, but I do like to layer it and look for confluence at times. So again, we're above or right at the 20 period moving average. Not expecting that 20 period to really offer a whole lot of resistance because we're right on it. And we do have the falling moving averages on the daily chart. So, if you were to think maybe a couple days out, we got these moving averages falling, right? How would it look if we rallied into that price range gap right here that I was talking about as we connect with the moving averages, which then drive price lower back down into this fair value gap? So definitely watching to see if that happens. Maybe we just do minor moves and we consolidate and we let this moving average come down and catch us. That's entirely possible too. So we'll be watching those on the higher time frame charts. Our moving averages, less concerned on the lower time frame charts. If you look at the 4 hour, we're way below all moving averages, and we have the 200 period way up here, right? So again, do we trade below? We start to see these moving averages come down, right? As we trade up and then back down, and then maybe see these moving averages catch us somewhere in this range, and then drive us back up to test this 200 period on the 4 hour, which if we trade down here low and long enough, it'll start to roll down, right? And then we'll probably see a moving averages catch us and drive us up and cross again, eventually bringing us higher. So we'll see that, and then we'll look at just a 1 hour chart, and that's all I'm going to look at. So we got the falling moving averages in the VWAP. We got the 20 period in the VWAP. We tested it, so that's our rejection. If you wonder why that wick rejected, one, it was a draw on liquidity on these candle highs, but it was also the 20 period moving average, right, by VWAP. We saw a little rejection, right? But we're going to start to see potentially this 20 period flatten out, and if we get above that, we can run a test on the 50 period. Well, where's the 50 period right now? Right inside that gap I was talking about, right? So now we got our confluence, right? We have an oversold. We have a lower low on our 1 hour. We got a lower low here. We got a higher low on our RSI. So we got our bearish or our bullish divergence. We have our, our 20 period right near where price is. So let's see us pop up above that. Let's see us run a test on the 50 into this, range here. We got a 200 that's starting to fall. Okay, see if we can test this, take some of it, and then get that sell down from there. I do still expect that we're going to see lower prices at some point in time, but I think Tesla got so beat up over the last 2 weeks that it's very likely that we do see some kind of relief rally, especially because Tesla's just so volatile. And I think it's important to note that we saw, money moving into Bitcoin today, and that could be a market mover and a market driver. So if we are approaching into a risk-on environment, when money's moving into high-risk assets, we might see something like Tesla see a nice rebound before we see a bigger sell-off. Also, things to note as far as some of our levels above. Besides this gap higher up, we have a daily point of control volume node that has changed now to 253. Okay, and that comes from this entire move down, this move up, and now this move down. So all of the volume inside of here rests at 253 is our point of control, or our average. So it's a little bit higher than our gap, but if we were to get up there and see some of our moving averages drive us up, some volume kick in, we might see a test of 253 before a bigger sell-off. We also have 261, which is a 15-minute unbalanced price range, and then higher than that, 268. But we won't worry about any of these buy side and these higher targets right now, because currently we are far away from that with price. So our main concern right now is this giant fair value gap on the daily chart, right, and then some of our internal levels that are most close to us. So again, I appreciate all the support. I hope this has been helpful. I look forward to seeing you guys on the next one, and take care.